Good day, everyone. Welcome to our presentation on taxation of our special case focusing on charitable institutions. Before we discuss tax exemption and tax liability, let's first understand what a charitable organization means based on our slide and LHDN guidelines. According to the slide, a charitable organization is an organization that is established and maintained to manage a public fund where the fund is used solely for charitable purpose. This commonly includes purposes such as religious worship or the advancement of religion. The fund must be used exclusively for activities like the construction, improvement, maintenance, or purchase of buildings used for charitable or religious purpose in Malaysia. This shows that the organization must operate for public benefit and not for profit. This definition is further supported by LHDN's approval guidelines under subsection 44(6) of the income tax at 1967. Only organizations that are primarily not for profit and meet specific conditions can be recognized by the Director General of Inland Revenue. In addition, LHD Practice Note No. 1 of 2025 highlights that charitable organizations must ensure donations and contributions are properly managed and used according to their objective, as this affects their tax treatment. In short, not every organization that claims to be charitable automatically qualifies under tax law. Approval and compliance are key. Now, to understand how this topic works in real-life situation, we have sent our interviewers out to speak with members of the public. They will be sharing views and understanding on the taxation of charitable institutions, including tax exemption and tax liability. Let's hear what they had to say.
Hello and Assalamualaikum everyone. Today we are going to interview some of random people about charitable institution. We will be talking about tax exemption provision for charitable institution with a focus on the amendment effective from the year assessment 2005. Let's go. Hello Miss, do you have some time to let me interview you?
Yeah, sure.
What course are you studying right now?
I am currently studying in accounting, focusing on advanced taxation.
Can you explain the tax exemption provision for charitable institutions and how they relate to public ruling or LHDN guidelines?
Sure. Tax exemption for a charitable institution is provided under Para 13 of Schedule 6 of the ITA 1967. Under this provision, most income received by charitable institution is exempt from income tax, except for dividend income. However, the exemption is not automatic. According to LHDN guidelines under Section 44, subsection 6, the institution must first be approved by the DGIR. The guidelines also explain that the income must be used only for charitable purposes in Malaysia. This means the money cannot be used for personal benefit or business activities. These guidelines act like a public ruling because they help explain how LHDN applies the law in practice.
Next, can you explain the amendment effective from the year assessment 2005 based on LHDN guidance?
Before year assessment 2005, charitable institutions had to spend at least 70% of their income on charitable activities to enjoy tax exemption. Starting from YA 2005, this requirement was reduced to 50%. This change is clearly explained in LHDN guidelines under Section 44, subsection 6. According to the guidelines, the amendment was introduced to help charitable institutions, especially new organizations and those with limited funds. For example, if a charitable institution receives 100k, it only needs to spend RM50k on charitable activities after year assessment 2005. As long as this condition is met, the institutions can continue to enjoy tax exemption.
Let's go, we find another person. Hi, Miss.
Hi.
Can you spend more time?
Of course.
Miss, can you give us an overview of the impact if a charitable institution not tax exempted?
Sure. In Malaysia, charitable institutions are not automatically tax exempt. They must get approval under Section 44 Subsection 6 of the Income Tax Act 1967. If they don't get approval, they are treated like a normal taxpayer and pay tax at the normal corporate rate, just like any other company. This applies to all donations, rental income, or business income, all counted as taxable income if there is no exemption. The Institute of Directors Malaysia also confirms that only institutions approved by the Director General of Inland Revenue qualify for exemption. Plus, LHDM Practice Note No. 1 of 2025 explains that donations received by non-exempt institutions are treated as gross income and subject to tax. If the institution misuses funds or operates for profit, LHDN can deny or revoke the exemption. Once exemption is lost, any surplus income becomes taxable.
Wow, thanks, Miss. Your explanation is so fantastic. And now this is my last question. So basically, approval is the key, and any income without exemption is taxable, right?
Exactly. Approval under Section 44 Subsection 6 is essential. Without it, the institution pays tax like any company. This ensures fairness, transparency, and that charitable status isn't abused.
Wow, that is so informative. Thank you, Miss.
Thank you.
I wonder what Para 13 Schedule 6 is about and who is eligible for the tax exemption.
I would like to answer that question. Para 13 of Schedule 6 provides income tax exemption mainly related to donation and contribution received by certain organizations in Malaysia. There are two main groups that qualify. First, institution or organization approved under Section 44 Subsection 6 of ITA approved by DGIR. These are usually charitable or public benefit organizations. Second, religious institutions such as mosques, churches, or temples, provided they are not operated mainly for profit and are set up for religious and charitable purposes. If this organization receives donation under this condition, the income may be exempt from tax under Para 13.
May I ask what changes took place from year of assessment 2017 and what are the limitations of this exemption?
Yes, I would like to answer your question. From YE 2017, the tax exemption under Para 13 was extended and clarified. The exemption now clearly applies to donation and contribution received by Section 44 Sub 6 approved fund and also by religious institutions in Malaysia for charitable purposes. For example, if a mosque receives donation to help the poor or fund community activities, those donations are not subject to income tax. However, there is an important limitation. The exemption applies to donations and contribution if the organization earns rental income or business income such as renting out building or running a shop, that income is still taxable. So, organization must separate donation income from commercial income. That's all from this part. Thank you.
Moving on to our next question, I find another person to be interviewed. Hi, Miss. Hi. Can you briefly explain the income tax exemption for religious institutions in Malaysia and how donations are treated?
Oh, I just read about it just now. I will explain this briefly using two income tax exemption orders and current LHDN guidance. First, under Income Tax Exemption Order 2017, a religious institution established in Malaysia for religious worship or the advancement or religion is fully exempt for income tax. This exemption applies to income for all sources and the institution is not required to file a tax return. However, the institution must be properly registered, such as with the Registrar of the Society Malaysia or another relevant authority. Next is the Income Tax Exemption Order 2020. This order applies to religious institutions registered as Companies Limited by Guaranteed or CLGBS under the Companies Act 2016. Under this order, the institution is exempt from tax on gross income, but it must obtain prior approval from the Ministry of Finance. The exemption is granted for a specific period, and the institution must submit an annual tax return and comply with LHDN requirements. So, compared to 2017 order, this exemption comes with more compliance obligations.
How about donations received by these institutions? Are they automatically tax exempt?
For this, it's not automatically. According to LHDM Practice Note number 1/2025, donations or contribution can be treated as taxable income if they are received regularly, linked to income-generating activities or support business operations. However, if the religious institution has valid tax exemption approval, such as under Income Tax Exemptions Order or Section 44 Subsection 6 approval, then donations are received are also exempt from tax. This is why obtaining and maintaining proper approval is very important.
Now I understand. Thank you, Miss.
Thank you to our interviewers for gathering these useful insights from the public, which help us better understand the taxation of charitable institutions. With that, we conclude our presentation on taxation of special case charitable institutions. Thank you.
That's all from us. Thank you.
Eating da 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 sayonara.
Sophia!
What changes to and
Focus on
heuristic?
No problem, Alim.